Well, good morning to everybody who has joined us online here this morning. Happy Friday. We're lucky to have some incredible people here in the Zoom this morning, and of course our stellar panel, who I'll introduce to you shortly. My name is Madeleine Grummet, and I'll be your host for today's webinar. A reminder that today's session will be recorded and shared with you post-event. Before we get started, I would like to firstly, on behalf of the Wade Institute, acknowledge the traditional lands on which we gather today, the lands of the Wurundjeri people of the Coleman Nation. And I would like to pay my respects to their elders past and present, and to all the First Nations people of this incredible country we are lucky enough to live on. I'd particularly like to honour the many women of the First Nations, women who lived and learned and birthed and told stories across the estimated 60,000 years of their rich and continuous culture here. I hope that we will all continue to find a way to forge a dual narrative and a more inclusive and representative nation, so we can learn from each other and create a thriving and shared future for generations to come. Now, we are coming to you here today from the Wade Institute of Entrepreneurship, a leading centre for entrepreneurial training based here at Ormond College at the University of Melbourne. Wade Institute delivers immersive education programs to accelerate learning, creation and connection. Current programs include co-delivery of the University of Melbourne's Master of Entrepreneurship, of which I'm a graduate, investor education program VC Catalyst, sponsored by LaunchVic, teacher workshop Upschool, to build that next generation of founders in our schools across Australia, and custom entrepreneurship programs, including Minderoo's Dream Venture Masterclasses for Indigenous entrepreneurs. Today's webinar is part of the VC Catalyst 2023 education series, and it's great to see so many VC Catalyst alumni in this session, and of course those in the current cohort. For those who don't know about the program, VC Catalyst is a one-of-a-kind immersive investor education program. It's designed to give active investors world-class tools, skills, and networks to make early-stage, high-growth venture capital investments. The program enables you to engage with a curated cohort of diverse participants and experts from local and international markets who can help you craft a strong investment thesis. As an alumna of the 2019 VC Catalyst program, I've used the skills, knowledge, and the networks to go on to build a growing portfolio of 60+ early stage startups and continue to learn from and co-invest with fellow graduates from the program. If you're interested, you're listening today and you're interested in learning more about that program or Wade Institute, or indeed any of the other programs, please do feel free to reach out to one of the team after the session today. Now, we're here, of course, today to talk about where things are at. And in particular, how do we think about closing the gap to move toward Australian startup funding diversity, equity, and inclusion solutions? Today, you're going to hear from leading US and Australian investors navigating the ongoing uncertainty of the current macroeconomic and geopolitical climate, while also setting the benchmark for strategic and successful venture investing. We know in the world of startups, as the recent LaunchVic and VC Catalyst VC Moment white paper highlights, the global pandemic has created some pretty tough ongoing challenges, but it's also created new and emerging opportunities for technology to be applied in a range of sectors, including financial services, medicine, healthcare, education, supply chain, and many more. We know, though, also that despite the overall deal participation of women founders increasing, the State of Startup Funding report by Cut-Through Ventures and Folklore Ventures, which you'll hear about today, found that the total share of capital that went to women founders has fallen to the lowest level seen in years. So what's going on? Well, our panel discussion today will focus on key insights from that report, and focus areas will include looking at trend forecast across the US and Australian ecosystems, portfolio prioritisation and diversification, DEI best practice, and how we really think about driving innovation and growth in the current environment. So without further ado, I would love to introduce our stellar panel, who have all got up early to join us today. So I'd like to firstly welcome Nisha Dua. Hello, Nisha, as she pops up. Good morning, or late in the day for you. So Nisha is the co-founder and the managing partner of BBG Ventures, which she co-founded in 2014. BBG is a New York-based early-stage fund leading investments in companies built by female and diverse founders, solving the needs of consumers, workers, and employers. You'll hear more about BBGV, it's quite a mouthful, later. And Nisha, before starting that, previously spent a decade working in media, tech, strategy and law. She was the general manager of AOL's millennial site Cambio, which she grew 4x in less than a year. Quite a feat. And prior to that was chief of staff for AOL, as well as a consultant for Bain and Company, and also moonlighted as an M&A lawyer for a while, which I'm sure serves her well. Kylie Fraser. Kylie, welcome. Good morning from sunny Brisbane, we hope. Kylie is the co-founder and partner of Flying Fox Ventures, an early-stage investment firm supporting Australian and New Zealand founders with global ambition. Flying Fox has more than 50 companies in its portfolio, and it has enabled hundreds of people to start or turbocharge their investment journeys. Kylie also moonlighted as an M&A lawyer, so we've got some pretty fierce talent here on the screen. And I would finally like to welcome Alister Coleman. Alister is the founder and partner of Folklore Ventures. It's a Sydney-based VC firm and was founded also in 2014. Folklore is a seed stage firm, a first check to forever partner for all of its startups, and invest over multiple rounds in startups built by Australian and New Zealand founders with global ambition. Again, we'll hear more about his work today. Good morning, Alister. So let's get cracking and straight into the conversation. Nisha, I'm going to start with you. Tell us about BBG Ventures. Why did you start the firm?
Sure. So it's pretty fascinating running a firm that actually has a particular mandate for founders. I think when you talk about investing in a particular type of founder, that can often be a little reductive. And I think we're going to get into the root of sort of some of these challenges as we get in today's conversation. But we really started the fund because we saw an untapped opportunity. We look at where are consumer behaviors, preferences, and priorities heading. And the way we describe our thesis today is actually investing in the polycultural future of America. And so if I look back to 2014, when we launched the fund, we were really, in the thick of what we would describe as a monoculture. Every single system built or researched for white men, essentially, right? Whether it's clinical research, crash test dummies, the AC in buildings. And when we launched, we saw this opportunity for what we felt was a way to find alpha, which was women building companies for certainly the dominant consumer set. But the world changes and no consumer group is a monolith. And so when you look at the events of the past 4 years, particularly globally, I think what you see is this emerging theme that identity and lived experience have taken on an entirely new meaning as a driver. And if you look out to younger generations, particularly in the States, Gen Alpha is going to be the first majority minority generation in the country. And so we are on the cusp of a historic generational turnover of power. And I think that is extraordinarily exciting. And that's why we've actually termed or coined this new term for our thesis around what does the polycultural future look like, and where will be the opportunities to back founders who really uniquely understand the challenges of these new consumers.
Amazing. Thanks for that explanation. What about you, Kylie? In a very different landscape here, and I'm not sure we're quite polycultural yet. You started Flying Fox with Rachel Newman a few years ago. I invest, of course, through your vehicle. Why did you start Flying Fox, and what was the insight you had at that time around creating a firm like yours?
Yeah, thanks, Mads. I think we started solving problems for investors first. So we came to Flying Fox. My own journey was kind of started with M&A law, which gives those excellent kind of transactional skills. But then I had a stint as a founder, and when I exited that business, I had some money to invest and couldn't find my people. All the other investor groups that I tried to join at that stage didn't look like me. It was very monocultural. It was lots of, pale, male and stale, sitting around eating cheese, and most annoyingly, not wanting to do deals. Like when I was cashed up and had transactional skills, and it seemed to me that at that time, people wanted to talk about investing, not actually fund really exciting companies, which was what I wanted to do. I want to put a caveat there and say the landscape now is very different. We were part of that first breed of commercial syndicate, which really helped attract a new kind of angel investor. And I'm really proud that some of our investors have joined the call this morning. I see you there. Thanks for joining. We have more than half of our investors are women, which is extraordinary. When the first State of Australian funding report came out last year or two years ago, I'm not sure of the calendar timing, but one of the things it reported on then was a real lack of women angel investors. And I kind of raised an eyebrow because I knew that I had so many great women investors in our network. And I think women are out there doing the investing at that grassroots level, almost as much as men. We're just not as good as promoting ourselves. The self-promotion thing, can get in the way in so many different areas. But we know that we are creating the next generation of female capital allocators. We know that for families and high net worths, it's usually the woman who is in charge of finances anyway, in traditional family units. So it was just this huge untapped potential to create an investment firm that was focused on, helping those women and, decision makers in families have the skills and confidence to invest in this sector.
Fantastic. And of course, Alister, we need to hear your genesis story. So you also had a stint as a founder. It'd be great to hear a little bit about that and then how you then transferred across into being a founding partner of Folklore Ventures.
Yeah, thanks, Matt. I actually started my career just wanting to be an investor. And so I, from my mid-teens, I was equity investing. And then when I went out into the workforce, my sole goal was to try and find an opportunity to do investment, which is something that I was very passionate about, and ended up working for a multifamily office that effectively had been doing angel investment, but that was back in the early 2000s, coming out of the dot-com boom. So I got a portfolio of companies pretty much as my first serious job, and I had to kind of work through that. But the fundamentals for building businesses on the internet was not really very strong back then. And so through that process, I ended up becoming a founder about 7 or 8 years later, built a company, and then we moved that company to the US. And I went back to the job of doing investment, which I felt like I was better wired for, and started building the firm. And when I started Folklore, I really had formed, the antithesis for what I thought venture capital should be, based on what Kylie saw, which is sort of people still living in the 90s, sitting around eating cheese and working out how they could, how they could exploit founders for sort of deep personal gain, not realizing that the founders drive the value. It's not the capital that drives the value fundamentally. And so I saw this antithesis, and I had been investing for a very long time by then, and sort of tested my sensibility and decided to build a firm. And it was clear to me, even back in 2014, that early stage investment would have competitive advantage in Australia that late stage, when you're making your first investment, that late stage wouldn't have, because fundamentally, if the company's good enough, it's got a car park of US VCs that should be wanting to invest. So that's the positioning. And then, going early and then going into B2B software was also pretty unfashionable back in 2014, 15. But it was just clear that if the vast majority of the shareholder base is B2B software, and, the wealth creation, then by virtue of the fact that that's created by people, you have a vast proportion of the talent base attuned to building companies for products for companies and for enterprise. And therefore you have this sort of compounding talent base that results in a compounding founder base. And so you just get this sort of compounding familiarity with B2B software over time. And, I love Nisha's mandate out of the US, but I think it's a very difficult mandate in what is a relatively small consumer environment. So that was my view at the time in Australia, and we've seen some good consumer startups, but we've seen a lot more B2B and advanced technology startups go and create value. So
Is that the case, Nisha? Do you think it's a difficult environment for consumer?
Well, I will say I should have clarified our perception of how to serve the consumer is actually quite broad. So we're 50% B2C and 50% B2B. So we think B2B models are sometimes the better way to scale to meet a consumer need. And we're really thinking about what are the fundamental systems that require reinvention. And certainly don't disagree that the opportunity for the classic consumer startup actually is limited, and even further limited for consumer product started. I think we could do a whole separate session on that. I do think the mandate for investing in founders who look different is also limited in Australia. So I think that could potentially be a double whammy. And, I think plenty of people would say, why do you need a mandate? Let's actually think about sort of what does our top of funnel look like? What are our practices like? And are we just having broad enough networks and getting enough of those people through the funnel? And so, I think that's a perfectly reasonable argument too, but plenty more to dive into there, Mads, and I know you've got some different questions to get us kicked off first.
I'm happy for us to just sort of keep rolling down the river because there's some really great insights you'll have. I mean, if we look at the current environment, Nisha, particularly, broadly, but in the US, we can see the ongoing tech wreck, so-called, and this compounding of the difficulty that we see with that tech wreck, and then companies having to be much more conservative and capital efficient. And I'd love to understand sort of what's the picture in the US and how are you seeing that play out in terms of then the compound effect of creating further disadvantage for underrepresented founders?
Yeah. Lot in that, and I want to be careful not to take up too much time, but what I would say is you essentially have this backdrop of 3 years of unprecedented events across the markets, health, socioeconomics, and politics in the US. And it's kind of not surprising that we're in this place. And so I won't get it. I think we've all followed sort of politics in the US, the pandemic. But if you just think about what's happened in the markets, the Fed rate was effectively at zero till March of 2022. And then it hit a 16-year high a year later. And so the speed of those rate increases has had an extraordinary impact on the funding environment, and also led to these subsequent kind of bank failures in the technology ecosystem here. And so when you look at the data on funding overall, we had like 18 months of record investment across 21 and 22. I think the peak was like 95 billion in Q4 of 2021. And then we saw that drop starting to happen when the Fed started raising rates. And so if you look at the data for the first quarter of this year, it's about as low as it's been. Like, it hasn't been this low for the last 5 years, but that picture is not actually the true story, because it's dropped to about 40 billion, but 45% of that is accounted for by investment in Stripe and OpenAI. So that takes you down to 25 billion, and that hasn't been seen since like 2017. So we've really fallen off the precipice. And if you want to look at that in relation to seed stage, it's been the lowest deal count for seed and pre-seed in a decade. So from a valuation perspective, valuations are down, round sizes are down at both A and B and C and D levels. Seed is the only place where they're still up a touch, which may feel counterintuitive, but it's really because multi-stage investors are coming back down because it's the only place they want to play, and they've got a ton of junior investors who want to do deals. And then you have the AI boom kind of picking up some of that as well. So
I might just stop you there, Nisha.
Yeah.
Thank you for that snapshot.
I was going to say that's where we're going to go. Yeah.
No, that's great to get that real macro view on where the US is at, and AI is super hot right now, despite Sam Altman telling everybody to stop building for a moment. But Kylie, can I just get you to give a quick snapshot at that macro level? What are you seeing right now, based on some of those talk points that Nisha's just shared?
Everything that is happening in the US that Nisha shared is happening here too. So we are seeing valuation compression everywhere else except pre-seed and seed. There is a real reluctance to get pre-seed and seed deals done at the moment because the economics are more attractive, slightly later stage. There has been a real focus on valuation multiples at revenue multiples used as a mechanism for valuation at earlier stages. It used to be, pretty rare that a Series A fund would get done, on a true revenue multiple basis. Now we are seeing revenue multiples applied, with vigor. 7 to 8x is seen as a good result. And if a company has, $1 million in ARR, and their revenue multiple is 7x, which is a decent result, then a 1 million ARR company has a 7 mil valuation. That makes it very hard to justify the risk of taking on a pre-seed investment on a safe note, say, that has a val cap of 4 or 5 million, because for just a small increase in price, I am de-risking the execution significantly. So it's a really difficult ask for investors. Now, some still are, there is still plenty of capital out there and the best companies are still getting funded. So I don't want to paint a picture that is all doom, but that's what it looks like from an investor's point of view. We are seeing better value in slightly more mature companies. We are seeing more competition from the big funds as they come down and hunt and pre-seed. Australian readers of the AFR would have seen that the Constantinople raise announced this week, which was a $38 million seed round. Like that is not norm in the Australian funding environment. That is an outlier because of the situation we found ourselves in, which Nisha painted so beautifully.
Yeah, and certainly we've got a black swan, environment broadly, and in Australia we're seeing rate rises as well, and that's causing all sorts of issues, of course, in job market and the broad sentiment around consumer spending. Alister, Folklore Ventures released the widely cited State of Startup Funding report, which showcased both the ecosystem bright spots that we've seen over the last couple of years and then some of the areas that probably needed attention. What did that report tell us? And that's a big question, but what did it tell us in respect of what Nisha and Kylie have just talked about around some of these trends that we're seeing and some of the data points?
Yeah, I think it told us what was happening in 2022, but it doesn't tell us what's happening in 2023. So we saw a significant discount to the, as Nisha said, significant discount to the number of deals being done. But as runways runways from companies that raised in 2021, 2022 start to reach their ends, we're going to see significant compression. And I think we'll see those numbers come down. Historically, seed stage, pre-seed rounds have been quite resilient. And if you go back over multiple cycles, it's actually a pretty resilient place to be focused on. You don't tend to get a lot of valuation compression, and you don't tend to get a big drop off in deal volumes. So interestingly, what we saw last year was almost just a very statistically similar result in pullback to flat rounds and down rounds that we actually saw in 2007, 2008, 2009. And 2010. Mm-hmm. So very, very similar movements.
Right. So you can see the patterns are similar. What did the report, I suppose, let's drill down that level deeper. What did it tell us about diversity? And obviously this is a lens on the Australian startup ecosystem. Yep. What did it tell us about diversity or lack thereof?
Well, from a funding perspective, it told us that a significant amount of that funding was coming from the US, and it's not coming from the US anymore. From an investment perspective or investee perspective, we had pretty good movement towards female founders. 19% up to 33% companies with female founders got funding, but because, for instance, Mel and Cliff don't raise a round, or because Mr. Yum didn't raise $70 million in that year, you see a collapse in the dollar value of the investment coming in. And in some respects, I think that effectively what you're seeing is sort of a truer reflection of what funding to women and minorities might look like, even though the volume of investments has gone up. And so I think, if anything, the sort of 2021 report might have been quite skewed. So I think it's a bright spot that more. Now we don't do, the report does not cover cultural diversity. So that's something that becomes a bit more ambiguous through the report. But certainly from a gender diversity perspective, it's good to see more companies with female founders getting funded in 2022. But I think the dollar value of that funding is clearly way off, and it might be that more.
So what is that dollar value, Alister?
Well, I'd actually have to bring the report up.
Or the percentage, because I've got some.
It was about 8%, Mads. It was about 8%. So I think if you think about it this way, you would have to have like if the majority of women in particular who received funding in 2022 were getting it at pre-seed and seed rounds, well, naturally the dollar value of those rounds are smaller, then therefore naturally the proportion is smaller relative to, for instance, more men who had companies of a 5 or 6 or 7 year old vintage that were raising more capital at the time. So it's natural to have this sort of moving around. I think the volumes are positive, but I think it will be a better reflection in about 2 or 3 years' time to see what sort of proportion of the total capital is actually going to female founders, because that will have allowed those pre-seed companies to have started to mature and get to the point where they're raising larger rounds. This year is going to be difficult because there's just less deals being done. Yeah. So both the total volume of funding will be down, but hopefully the proportion of funding to female founded companies does not fall. And I think you bring up some really,
sorry interrupting you there, I think you bring up some really interesting points, and I'd like to throw to Kylie here. There's been calls for greater transparency, more accountability and more tangible metrics for VCs to report on, and certainly some of the work from that report is pointing to that. And there's 2 numbers that have been talked about as a starting point. One is the percentage of deal flow, so the number of women-founded startups pitching per year versus the total number of pitches seen. And the second is the percentage of capital invested, to Alister's point. What metrics do you use at Flying Fox, or do you have a view on what we really should be tracking if we want to get to a more accountable and transparent state of play?
Oh, there's so much in that. You ask big questions, Matt.
You've got 1 minute.
Okay, I was itching to get in on some of the things that Al said, so I'll do my best.
Oh, please do.
I think there is this kind of almost barbell effect when it comes to women-funded women-led venture-backed startups in Australia. There's lots going to pre-seed and early stage, and then you have the whales, your Mr. Yums and your Canvas who skew. What we don't have is this line in the middle where women are missing out on their, kind of respective share of the capital. I'm not sure I agree with Al that will wash out in a few years, because I think those stats, although we don't have the data, I've been around this sector for a few years, I think those stats, have been consistent. We should already see women coming up and receiving their fair share of capital in that middle barbell stage. It's not just a matter of we haven't started early enough. There are fundamental problems in the system that we need to address. Some of the ways we are doing that at Flying Fox, and we're very proud that we have 38% of our founders have one female in the founding teams. We strive to do better, but that's where we're at without setting a mandate like Nisha has. We've just been lucky in that some of the ways that we think about things, also by having a women-led investment committee and it being 100% owned by women, kind of helps these things, because we do believe that more women allocators, more women in seats of power will help things trickle down. It's not the only solution. There are no easy solutions here, but that's one really big one.
And Kylie, that's about 12% right now in Australia, right? We have about 12% female representation in terms of investors around the table.
Even like, I don't know what the stats are, but if you look at founding partners who have a disproportionate amount of power, people like Nisha, people like myself, the number is even smaller.
Right.
I'm all for promoting women through the ranks, but those of us who've started our firms truly hold a disproportionate amount of power. So for all you,
so when you say power, we're talking about decision-making power, the ability to actually say, yes, let's push the green light and let's write the check on that one. Right. You mentioned, Kylie, there are fundamental problems in the system. Now, this is a whole thesis, and hopefully we can all stay on the call all day to talk about them. Nisha, what do you see as a couple of those fundamental problems in the system?
Yeah, I mean, we think about this from top of funnel all the way and then at every stage. And in fact, we actually have an LP of ours who runs a 10-week bias training for all their managers to help managers try and assess where is the bias in their system and where are the breakpoints. So you talked about Mad's transparency, not just on the proportion of capital ultimately, but looking at deal flow. And I think certainly funds have to decide that they want to self-report on this for any type of change to happen. That's the first piece of any DEI. So I'll actually give you a story and add ethnic diversity to this lens just to kind of make the point. So when we launched, we did say we're going to invest in all companies with at least one female founder. And actually our stats today are probably like 50% of the companies have only female founders and about 50% have a male-female team. But at the end of the first year, I looked at our roster, and we've invested in over 100 companies now. I looked at our roster at the end of the first year, and half the table were tall blonde women, and my partner is a tall blonde woman, and half the table were short Asian women, and I'm a short Indian Australian woman. So I said to myself, like, we are falling into a trap potentially that everyone in this industry does, which is you find people like you get along with them, and you invest in them, and that's what makes.
So it's classic pattern matching, right?
We all pattern recognize, and Kylie stated some of this, right? Like the more women or the more diverse folks you have as investment writers, the higher the likelihood that you will have a diverse portfolio. And that Harvard Business Review has done a ton of studies on this. So we said we actually have to activate our deal flow in a completely different way, which means we made a commitment to taking cold pitches from founders of color. So anyone who emailed us who was a founder of color, we said it doesn't matter, we're going to take a call with that person. So that was one thing. Then the second thing was building intentional new relationships with accelerators or pre-seed funds that backed founders of color, building new relationships with GPs of color so that we could say, let's turn these people into warm nodes on our network so we can increase that so-called warm set of referrals as well. And so today in our portfolio, 100% of our companies have a female founder on the team, but 70% have a founder of color and 36% have a Black or Latinx founder on the team. So it's been really intentional, but there's a whole set of stuff there in the middle. And a firm really has to put in its own processes in place to say, where is bias showing up when you move something from that top of funnel assessment into diligence, and then from diligence into approval, because the pattern matching shows up at the decision-making time? Did they go to the right school? Have they worked at a top tech company? And are we looking at those attributes versus the attributes of what makes a great founder? So I think there's a lot in that. And the last thing I'll say about the women piece is the data does show that women are asked questions based on performance today, and men are asked questions based on potential. And that is true whether the asker is a woman or a man, actually.
Yeah.
And so this idea of like this double tax is quite clear in the data across many studies.
Definitely. And actually, Alister, I'll go to you here. There's this, there was some research by Dr. Laura Huang, a professor at Harvard Business School, who spent about 5 years studying gender parity in the startup world. And she found while women founders were often asked preventative questions, so the glass half empty, that men were not. And we know that there's some good data around women often sort of undersell themselves and also won't be as positive around their financial forecasting. What do you see at Folklore? Do you see this phenomenon playing out around the glass half empty?
You see that in hiring and you see that in founders. So there was, I think, quite a bit of research around how women apply for roles that was done. We, in fact, one of our portfolio companies, Ansarada, commissioned quite a big study on that, which is women value themselves based on what they have achieved. Men value themselves based on what they're going to achieve. And so men pitch themselves for roles a lot better. So you see that in hiring processes. Typically, the more equality-based hirers will have fewer job requirements versus the less equality-based hirers that will have a lot more job requirements, and women start to discount themselves. I think that this funding market is starting to value people for what they've done rather than what they're going to do. I think we're getting beyond this point of just selling the upside because capital efficiency and and good stewardship over good decision making is actually becoming more important.
So you're talking about a harder.
I think there's a harder bar. Yeah. There's a harder bar for men who want to pitch what they're going to do and ignore what they've done. And I hope it plays into. I hope it plays into the female founders a bit more, that they can actually point to their traction, point to the runs on the board. But I think within our portfolio, it certainly exists from a female founder perspective, but then we've got a couple of female founders that are very, very focused on the upside, very, very focused on the potential of what the company could do. So I think the rules of thumb are dangerous when you get down to the per founder level, but by and large, I think there's enough statistical evidence to say that women tend to undersell themselves. And I think Kylie said that she disagreed with me on a certain point. The point that I was making was not that I think we're going to see it all shake itself out in 3 or 4 years. I think the point I made was it will become clearer to everybody whether that funding starts to turn up in 3 or 4 years. My hope is that it does, but we don't, we can't future state and predict it. So it's only going to become clearer what the effects of the last few years will be in 3 or 4 years as those companies start to mature, as opposed to me saying it will just turn up. I don't know if it'll turn up.
And based on the example in the US, it won't, right? Like Series B is where it gets less at Series A, it gets less at Series B. Yeah. And so you really need more funds led by diverse managers leading these larger funds too. And so it starts at the capital level, and not to be in the doldrums about it, but I think the pattern is existing in other markets. Yeah.
I did see some stats recently that over the last 18 months, more junior female investors have been hired than male junior investors. And I don't know how accurate that data was, but if that's the case, then you've got the start of a change. I think Kylie's right that then the question is, how do you kind of bring people in at a more senior level that have equity in these managers that have, I see seats, investment committee seats that can start to get some balance. And then, Nisha's talked about some mechanical decisions that the teams can make to try and improve diversity as the pipeline starts to come in. And I think that all of those things will have to start adding up for continued change.
Definitely. Just a reminder to those who are on the call today, we'd love your questions. We'll go to Q&A in just a moment. Before we do that, I'd love to get one final tip, I suppose, from each of you to those who are on the call who are investors or thinking about investing. How would you encourage people to go into the investment sector and start to really embed DEI solutions in the DNA of their thesis or the way that they set up their processes in the fund? What would be a practical tip or set of advice you could give people on the call today around that so that they start as they mean to go on?
I would.
Yeah,
Sorry, go ahead.
Oh yeah, I was just going to say, I think you don't even have to include it in a mandate. I mean, we've done that because we felt that we would find alpha there, and I think that's fine. But I think you have to be really honest with yourself and seek to meet people who don't look like you. And you have to find new nodes in your own network. That was the way I described it for us. But you really, even when you meet those people, then you have to say, what is my own subconscious bias when I assess these people as I'm meeting them? And like, you've got to out yourself, right? Like, I went to UNSW, I got X in my UAI or whatever, and then I went to Bain, whatever. Does that mean that a founder has to have XYZ? No. And so you have to also reframe the types of questions you're asking people and come up with a new rubric, right? Challenge yourself to say, what is my pattern recognition today? Where might there be opportunities for bias in that going forward?
So check your blind spots regularly.
Yeah.
Kylie, did you have anything else to add?
I mean, that's a really good one. Learning about how prevention versus promotion questions look, and reframing them, having a list of questions that you ask everyone, like we've all got our handful of favorite questions. Make sure they are expressed in the same way, regardless of who you're asking them to.
Yeah, and as the sort of male panelist, I think one of the tricks is to start spending more time with female investors and allow female investors with a different lens to start informing what opportunities there are in the market. That is a really quick hack to solving for what may or may not be an inherent bias. I don't think I've got a significant bias one way or another towards gender or sexual orientation or cultural ethnicity, but it certainly will be there. Challenging it's important, but you can find hacks that give you a diverser pipeline. And one of those for me would be to spend more time with female investors.
Thank you for all of those insights. We might just throw to some of the fantastic questions that are coming through. Again, if you're on the line, please throw your questions into the Q&A. If you go down just below your chat function, you can submit them in the Q&A section there. So we've got a question here from someone who says that they mentor and judge for a Singapore-based impact VC who runs programs in emerging markets, and the quality of female founders match what they have seen when attending demo days at 500 Global and Sequoia. The question is, given that VC investors often view startups who gain entry into a top accelerator as being more valuable, is it time to start female founder only cohorts in accelerators? And any of you are welcome to jump in on that.
I can take a stab at this one. I don't necessarily agree that accelerator attendance is seen as signal to the extent that it used to be. Accelerators have, become quite prolific. The cohorts are much larger now than they used to be. So I think that has, lessened the signal somewhat. Somewhat controversially, I'm not a fan of gender homophily. I am not a fan of putting all the women together in a room and saying, look, here's a lady co-op. I just don't think that's the way forward. I think make sure you're getting great women into great accelerators. Don't fence them off and say, you know, do your lady things over here. That's what I think is the way forward.
Nisha, you're nodding there.
I agree 100%. I mean, I think if we are starting to focus on like what's the female founder cohort of YC or 500 Global, then you're actually effectively letting the accelerators off the hook on what we're talking about. They should have a process that means they're getting enough women into their cohorts, and quite frankly, they're not right now. So I'd agree 100%. And listen, at the end of the day, to move the needle forward, we should all be working together, and you've got to have male mentors and male investors and all of that to move the dial. So yeah, no, I agree with Kylie.
Okay, a gear switch here. We've got a question from Chris. Thank you, Chris. The question is, given that women are more likely to start businesses that serve solely female and women identifying individuals, how do the political and regulatory environments contribute to the complexity of developing an investment thesis into those businesses? The context is, this person is thinking along the lines of reproductive healthcare regulation in the US. Maybe, Alister, you might have a view, or Nisha, given you're sitting in the US.
I'll give two answers to that, which is one, I actually think the first statement is incorrect. So I don't think it's more likely that women are building businesses for women. It's certainly true that back in 2014, the top 5 categories for female founded businesses were like commerce and shopping, community and lifestyle, consumer goods, and a few others. But in we did an analysis of this actually. In 2022, none of those categories ranked. The top categories were biotech, software, AI, healthcare, and financial services. So I think it would be a misnomer to say women only build businesses for women. But I think your question is well taken, which there are a lot of people who want to build fertility businesses, reproductive businesses. And the best example I can give you right now is there are actually a number of startups who are building emergency birth control or abortion pill companies in the US, right? And this is a big topic, which is like, can these companies even survive in this complex environment when the right to the abortion pill is being taken away in many states? So I don't think it's complex if you believe that that's where the consumer is going. I think what the data is showing from some of those companies that they're coming up against these legal hurdles, their revenue is going up because the demand is there. So I think where there's my view is where there's a will, there's a way. And if you have a real belief in the opportunity, you should build the business.
Okay, thanks, Nisha. Alister, I might go to another question. We've got one that's popped in from Jenny. Thank you, Jenny. She says, you all mentioned females are underselling themselves. The research that I've seen suggests that they are realistically selling themselves and often overachieving the targets, whilst men oversell themselves and don't achieve those targets. And yet the allocation is still made on unrealistic promises, with neither the ventures or the allocator being called out on this. What's your view on that, Alister?
Thank you for throwing me that question.
Pleasure.
I think like all generalizations, they're generally incorrect. So the comments here would be based on what we see, not on broadly what the public perception would be, or what other people's impressions of other firms are. I've sort of learned over time to be very careful about forming a view about how another firm is investing, what it's thinking, what its motivations were.
Yeah.
Because you know, those things all play out behind closed doors. So I'm not really sure how to answer that question, to be quite honest with you, because I think there's a risk that any answer will be sort of incorrect,
And that's okay. We're not going to hold you. We're not going
it.
to hold you accountable to the whole of humanity or the males across Earth right now.
Well, I can't change. You know, I could go through a very complex process to change my gender.
Can I jump in and give a supplement to your answer, Alister? Because I know where you were going with that underselling comment, and I'd love to add to it if possible. I think, Jenny, it is certainly true that allocators are not being called out for funding businesses that have oversold themselves. And I think that is a flaw in the venture system. But what I would come to is, in the case of selling a business to an investor to get money, the key is that it is a sale. And venture is about backing big, transformative, paradigm shifting businesses. And so I think where some entrepreneurs go wrong, and we can take gender out of it, is selling the business you're building today versus selling the big opportunity. And while I think Alister's right, founders are going to be held more accountable to what have I shown, what is the actual traction, are there business fundamentals. I think what people get wrong is pitching this wedge that they're building today or the business they're building today, rather than how what they're building has the potential to transform an entire market. And that can sometimes be, and we've seen this with women, and it is advice we give to women when they're pitching, that you have to reconstruct your narrative to go after the big game-changing problem. So I don't know if it's as much about underselling yourself as it is about selling the opportunity and showing how you're going to get there and proving that you're the person who can get there.
So it's sort of, is it communicating the how big can this get thing, which I know Scroobius and others have been doing some great work in educating founders in the US. What about you, Kylie? Do you, I mean, one of the other things in that question that came from Jenny was really how we overcome it, because we don't want the female to have to keep fitting into the existing male model, that it's something around what we've built.
The answer shouldn't usually be fix the women. That is usually not the answer. There is usually a problem in the system that can be addressed, rather than women constantly trying to need to be different things to different people. A really simple solution here to a really complex problem is to better train the investors to discount the hyperbole of men, and to and to recognize that women investors are more likely to be realistic. That is a really easy thing to do. That's something that we do, and we do it inherently. Like we don't have systems and processes around it, because at the moment our investment team is all women. But at bigger firms that don't have investment teams that look like us, I'm sure there are some great materials that can help train investment teams to kind of better account for that internally, rather than pushing it back onto the women.
I know Giant Leap have certainly done some great work here around some of their DEI education. Alister, maybe can you think of some firms or some best practice that you can see around this side of things that we're talking about, where we can better educate investors?
Having a process, like Kylie said, where you have set questions that you have put under scrutiny in order to ensure that you're not baking a bias into the types of answers you're looking for. I think that that's very powerful. We have a scorecarding system here where every single member of the investment team has an equal vote on the investment itself. And we don't allow the loudest voice, the most senior voice in the room, to carry that score. So we've, if everybody has availability to the investment thesis and can read that investment thesis and be part of the process and learn from each other, and then they can apply their score over a set of criteria that you bother to actually think about, then you can start to remove some of the inherent bias that sits within one or two people making the decision. So, for instance, our investment committee makes a fund allocation, weighting, industry-based, stage-based set of considerations, rationality of the investment thesis, clarity of the investment thesis based decisions. They are not looking at the veracity of the team and the investment itself. That is what the investment team does. And the investment team provides that information through a scorecarding system where we get standard deviations over 40 odd questions, and the IC basically collects that information and says, okay, this is what our team on an even weighted basis believes this company is. Now let's think about how we want to allocate the fund.
Fantastic. Yeah, it sounds like there's some great work going on. We could have gone into all sorts of other pockets of conversation today. Thank you, each of you, Nisha, Kylie and Alister, for taking your time this morning. I know you're busy people, to share with all of us and everyone on the call some of the things that you were doing. If people want to learn more about what you're up to, of course, they can check out BBG Ventures, Flying Fox Ventures and Folklore Ventures, including the recent report that was released. When's the next one coming out, Alister? Is it annual or?
February, March 23.
Great. Okay, so we'll look forward to some shift in data, or we'll see what the world's got in store for all of us between now and then. Again, to everyone on the call, if you're interested in learning more about any of these firms and also VC Catalyst or Wade Institute of Entrepreneurship, please, I encourage you to reach out to one of the team. Again, thank you very much for joining us. Please keep doing good things in the world, and we look forward to seeing you all soon.
Thanks.
Good morning.
Thanks.